Well, hey everyone, this is Warren Howe and we're back with another video. Now, today we'll be talking about just one word. Yep. But before that, I want to ask a question. Looking at this image, right, if we were to give one word for this image, what would it be? What can you see from this image alone? Yep. Is it discount? Is it smart? Is it freaky? Warren Buffett freaky, right? So we got Warren Buffett giving in 50 cents, right? Or a penny, whatever it is, getting back $1. Could this be scam? What is that word? Now, when it comes to investing, the word I think about is value. Now, value, we can get value anywhere, everywhere, right? Growth companies have value. Value companies have value. Duh. But essentially, why are we investing in the first place? A lot of people, they tend to have this misconception, or they get, carried away from the hype that everyone is actually getting from investing in this particular business. So why are you investing in SoFi, for example? Why are you investing in Tesla? Why are you investing in Palantir? Because you heard that, Alex Karp is awesome. You heard that the company can perform, unimaginable decision-making qualities that people can't do? Or are you actually buying just because a friend is buying or a YouTuber is buying, right? So why are you buying that company? Essentially, when it comes to investing, obviously the bottom line is whether or not they can make money and whether or not we as investors can make money off that initial investment. So when people get carried away, they miss out on how much that X amount of value they can actually get per investment. So in this image, you can say it's smart, you can say it's freaky, whatever it is. I see value. In the stock market is a device where we can literally use to triple our net worth simply by doing research, putting in our money, getting in value companies, getting value, and having capital gains in maybe X amount of years or X amount of months, right? So that's how sexy this asset class can be. All we need to do is constantly find value. So when it comes to value, this is investing in one image. What we also want to find is the intrinsic value. Now, when it comes to Warren Buffett, he has been pioneering this all the time. He talks about cash flow for owners, right? He talks about how much the value of an asset today is the value of the cash flows it can generate over time, discounted back to today's price. Now, I did mention this before in a video, and let me repeat that again. Finding the true value, which is the intrinsic value of a company or any asset, essentially, right? Whether it be, property, farms, whatever it is. The amount of cash that this business can generate for you over time, add up all the cash flows, right, at X amount of duration, where you deem that this is, we want to peg a terminal value, right? So we want to deem how long it can continue to grow or how long you're going to hold this company for. You add up all the cash flows, right, which is what Warren Buffett states as owner's earnings. We add up all the cash flows. We discount it back to today's price with a suitable discount rate, risk-free rate. If that value is higher than the current market cap that it is today, then we could buy. That's essentially what intrinsic value means, right? Based on what Warren Buffett is saying. So what I'm talking about today is the concept of value, the concept of intrinsic value, and how we should actually deem that this company is a good investment for X amount of years. So that takes qualitative analysis studying, quantitative analysis. It takes good projections, right? Are you doing your own projections for your companies, right? So intrinsic value. And essentially, we want to consider how much cash a business can generate for us over time. If we can't answer that question, then sad to say, we can't buy that asset, right? So the perception of value. So imagine this, if you buy a bond, the percentage of how much you can get on that bond is printed on the certificate. There's a 3% bond year over year in 30 years' time. There's a 1% bond, right, that you can get in 1 year's time. That's printed. That's fixed. But it's our job as retail investors to actually put in a percentage or the price, what I call price print on that particular, stock or business in, X amount of years. It's our job to do that. For example, Tesla, 2005 in 5 years' time. Maybe. I believe it could. I've done my back of the envelope valuations. I've done my projections. I've done my thesis. So what is yours? What is your price print on Tesla? What is your price print on SoFi, on Palantir, right? So imagine we could, imagine if every stock that we invest in has a particular price print on it. Wouldn't it be better? This is our job as investors that we need to do. Yep, to determine what is the percentage price print on the stock certificate. So it's same as buying a farm, property, or any financial asset. But it's subjective because then we come into crypto where there is not a cash flow producing asset. So how do we value crypto? That's another story for another day. But essentially, when we want to invest in assets such as stocks, when it comes to value, we want to assess intrinsic value, we want to assess cash flows, we want to assess earnings visibility, all these things to consider. Yep. So I hope that makes sense to you and it got some value, and I hope you got some value out of this today. Yep. I'll see you in the next one. Thank you.